Hey, good morning. Morning, Alan. Morning, Craig. Morning, Jason. Morning, David. Morning, everybody else. If you want to chat with me during the live stream, all you got to do is be a subscriber. Just takes a couple seconds. Then during the live stream, the chat opens up right next to the video or right under the video, whichever. Depends on what platform you're looking at. Morning, George. And you can chat and ask questions or just make comments or, be snarky, whatever you want to do. You can slam on me if you want to. And open season on everybody, right? Just be nice to each other. Anyway, I'm here to help try to make sense of these markets. And it seems like we're built on a house of cards. Just can't drop. We're being held up. Is it artificial? I don't know. Could be. Let's talk about what I'm kind of seeing here. And so we have market forces putting a constant bid under the market. So this is an interesting chart right here, ticking time bomb, potentially. It's the total notional open interest in the S&P, the NASDAQ, the SPY, the QQQ, basically the indexes. And look at that. We're talking about $11 trillion. $11 trillion in options right there. Total options notional open interest. Think about that a second. Think about it a second. Yeah, smash the like button. Yeah, yeah. Like and subscribe. You know, if you do like it, I mean, hit the like button, but certainly hit the bell with the doodads. And if this is content that YouTube thinks you'll watch again, then you'll get a notification every single day when I go live. And I do it twice. I go live twice on Tuesdays. Anyway, total notional option interest right there, $11 trillion, maybe, approaching 12. This could be a ticking time bomb. So, we've had growing options since all the way back here in 2015. It's been pretty volatile. We get some spikes, we get some dips. Usually people get overexcited in options as we rally. And then when we go into a plummet, the value of option, we see these pullbacks like we saw, late 2018 and 2019, we see a pullback. We get this pullback here into 2020. That was COVID. And then lately, though, I mean, this has gone on a whole different trajectory here in the more recent couple years. I mean, look at this. We have really ramped this up. You know what happened right back over here? Daily options kicked in. This has gone crazy in the daily options. So are daily options going to cause some sort of problem? I mean, this is all money that's flowed out of the traditional equities market and into these options. Let's keep an eye on this. I'm keeping an eye on this. I'm not telling you to keep an eye on it. This could turn into some sort of problem here. So we're seeing total passive fund assets under management. We went through a dip. We're kind of climbing back. We have not got back to the top. Your 401k has been hijacked by 7 stocks, essentially. So there's nearly $18 trillion inside the NASDAQ valuation between Microsoft, Apple, Google, Nvidia, Tesla, Amazon, and Meta, making up 54% of the QQQs. Imagine if there was a problem in big tech. What kind of destruction that could do to the market. Morning, Francois. My sloppy accent. Anyway, so these are things, like when I talk about being careful the last weeks, as we have come up and gotten a little crazy, these are the reasons why I'm like super cautious. Like, the market's not balanced. It's highly imbalanced. Now, it can remain irrational and imbalanced longer than we can all remain solvent. I mean, that's what is his name? Keynesian, whatever, said that. Another guru claims he said it, but that's not true. It was a famous author of market analysis that said it. And we've seen this assets under management grow from 2.5 trillion in 2012 to more than 11 trillion in 2023. Everybody just kind of dumps it into the market funds. I talk to people all the time. They're like, "What do you do?" And I talk them. I do financial infotainment, and because that's really what I'm doing. I'm providing entertainment and it's information, and I try to be truthful with you. And a lot of people are like, "Oh, I just dump my money into a fund and I don't worry about it." So we're seeing a lot of AI investment portfolios. Like, people don't even get involved in this anymore. Like, 401ks, you dump your, some people only dump 2 or 3%. Some people dump up to, 10, 15% of your paycheck into 401ks. They go into these automated management systems, and we're just seeing this epic growth right here. Now, we did get a pullback, but, when the AIs are focusing on, 54% of the money, the valuation into Microsoft, Apple, Google, Nvidia, Tesla, Amazon, Meta. And Amazon's lagging right now too. This is kind of, causes me to be a little cautious. I keep beating the drum on cautious because, well, the valuations of most of those companies have gone right back up. Apple approaching $3 trillion valuation just by itself there. I mean, I don't know. Anyway, 0-day junkies, this is what I was talking about. You have 0-day options. These, back here before we got into the recent time, you just had, you had 1 day. Oh, well, we started out with just monthly options. Then we added weekly options, and that picked up the pace a little bit. Then we added 3 days a week options. Well, that spiked it up even more. And then we added daily options. Now, daily options aren't on a lot of things. They're just on a few of the major indexes and stuff. But there's a lot of money. This is percent of the total S&P 500 volume right here per day. And right now we're looking at 50% of the S&P 500 volume is in 0-day options. So instead of that money being in the broad market, especially where it can affect volatility in VIX, we're seeing it trade in 0-day options the last year, basically. So it's kind of interesting. And we're kind of overdosing on gamma. That can create volatility that's not priced in with VIX. So watch out. A lot of people love 0 days, but at some point this can create a problem. 0 days are options, so you have underlying S&P 500. Options are derivatives that are leveraged, and every financial crisis we've had in the modern times has been due to some sort of derivatives on, some sort of leveraged derivatives on an underlying asset. We saw mortgage-backed securities and and leveraged derivatives of mortgage-backed securities in the last great financial crisis that we saw in 2007, 8, 9 timeframe. Now we're seeing options in the broader market. When this probably comes apart, watch out. Something can happen here. Now, I'm not saying it's today, tomorrow, next week, next month, next year, but eventually this may cause a problem, especially if this ramps on up way past 50%. All right, let's got the market. A lot of the market instruments aren't set up for 0-day options to be most of the volume. So it's just a fundamental market change, and what the implications or what the fallout of this might be, I don't know. But VIX is not responding properly to the potential volatility that may happen. So it's kind of the great hijacking here too. We see S&P 500, top 15 stocks, and the remaining 485, and then NASDAQ, the top 10 stocks, and the remaining 90. So we're seeing 2/3 of NASDAQ hanging out in those top 10 stocks. We're seeing S&P, about 1/3 of the S&P in 15 stocks, where 485 are the rest of it. So these are interesting dynamics that are playing out in the market right now. And one of the reasons why I keep saying be careful, this recovery rally situation hasn't really been broad market. So we're kind of sitting on a house of cards where 7 stocks, 15 stocks represent the majority of the gains that we've seen this year for the up. So all trading involves a substantial risk of loss, past performance, not necessarily indicative of future results. This presentation here is intended to be informational, educational, and fun. Hope you have fun. It's not a recommendation to buy or sell anything. Anything from me, anything from anybody else, any financial instrument, no stocks, no options, no, just take your money out and put it in a mattress if you want to be safe. Now, if you desire personal financial advice, you need to hire and consult a financial advisor. A lot of times that's a robotic advisor these days. But if you actually want to talk to somebody, they have a fiduciary duty to give you advice based on your financial situation. Yeah. Anyway, calendar for the week. We have unemployment claims coming out this morning. We're running a little high. They're like, oh my gosh, it's, I saw the headline, epic high, whatever, rising unemployment. Give me a break. This thing's just churning. It's back to the resting churn. I don't know why that just jumped, but when we look at it right here, look, I mean, it churns at, we're at the resting spot. We were at the resting spot back here. I think COVID's going to forever, mess with this. We'll never be able to really get back out of it, but we churn around 200, 300,000 jobs. It drifts up and down, but that's kind of the way the market goes. We do get some spikes when we start losing 500,000 jobs. That's when there's a problem. Look, 2008 into 2009. I mean, that was a problem. COVID has distorted this thing, but the normal economy, we churn between 200,000 and 300,000 jobs all the time. Like, that's just normal. So I don't think, plus the system's, weird anyway. I don't think you can, look, there's a cycle to it. And that's probably their seasonal adjustments playing out there. Plus, most of the states can't even report it fast enough to get it into a weekly report. Like last week's unemployment claims, they don't even know for like a month. I read about that quite a bit during COVID, trying to keep up with these astronomical numbers that they estimated. A lot of it's just estimates, and I don't know. I don't think it's very accurate. Seeing a little unemployment popping back up to, some of the highs that we've seen since, the recovery kind of officially, we recovered, whatever. I don't know. I don't think it really tells us much at all because the numbers are so baked and cooked and whatever. We have Fed Chairman Powell, speaking again in front of, I think, the Senate today. And we'll see what he has to say. Yesterday, a little bit of volatility. People were giving it a little weight. I don't think it really, the market may move based on what he says, but I don't think it's, we're in a correction. We're probably going to keep correcting. We need to go deeper. And that's kind of where we're at. Now, interestingly enough, with the Bitcoin rally yesterday, we're seeing the Bitcoin dominance right here. Dominance of Bitcoin coming up almost to 50% of the entire crypto market. Ethereum, about almost 20% of it. So between the two of them, like 70% of the entire crypto market is in 2 cryptos. All your other altcoins, I don't know. We're seeing the market cap of crypto climb back up to about almost $1.2 trillion. That's a far cry from the $3 trillion. And we still got a long way to go back to the $3 trillion top back from 2021. But it would not surprise me as we move into the halving event. And if you're unsure what I'm talking about, go watch Monday. I did a whole crypto special for like an hour. So let's jump into what's moving today. S&P 500, still expect it to get the deeper retrace here. Market opens in about 5 minutes, and I expect this to continue. at least, at the minimum, come retest this consolidation right in here. If that can't hold, we'll probably come back to the roadmap line back down here. There's a missed monthly pivot somewhere around 4150 on the S&P 500. And I expect us to kind of go revisit that. It's back to the top of this, back in toward the top of this consolidation here. Maybe a spike down, reverse, that would be very healthy, and we can see all-time highs if we did that. That would be pretty sweet. This would kind of flush out a lot of the funk we've had the last few weeks and get us back on a path where we can go higher. Maybe get some volatility priced back into the market. So ES, when we actually look at the live charts here overnight, continuing to push lower. Yeah. Like I always say, hanging out below the roadmap line, even on a 15-minute, is bearish. I mean, we can go all the way down to a 5-minute, still hanging out below the roadmap line, not really able to break above. 30-minute, haven't even come up and retested it at all. Just, we retested it there, and then drift off. The next support, now that we're pushing down below this box right here, next support is down here at 43.28-ish, where we've made these lows after the contract rollover. And we may go on deeper. So keep it in mind. NASDAQ also continuing to push lower, a little accelerated on the move. It was interesting yesterday. I kind of keep track of the net longs and shorts on futures. ES is getting a massive flush out. Like, longs are getting flushed out of ES. Now, ES is, the big contracts, I mean, we're talking like 10,000, 20,000 contracts getting flushed out on a net basis. Now, there are tons of contracts to get traded any one day. You look at the volume down here, just in 30 minutes, there's 14,000 contracts. But usually, long and short for the day stays pretty balanced. But when we get a large imbalance of like 10, 20, 30,000 contracts in a day, that kind of indicates that the market's, swaying to one side or the other. It kind of negates all the day traders that go long and short all day. Now, we were seeing a big flush out on ES, but yesterday I was seeing a large, and NASDAQ doesn't usually show large contracts. Usually it stays pretty flat all the time. But yesterday I was seeing a large buy the BFD, buy the freaking dip. Like, there was a net long that was very big into the close yesterday. I was like, I think the market's going to rip those. So I think those people going long, while it could be people stopping out or, booking their short or whatever, I don't think you go long here in a big way and the market not try to take your money. So see, on net shorts picking up on ES, which can either indicate we're going on down, or it indicates people closing positions after being long. Now that's kind of you don't know exactly which way it is, but you look at the bigger time frame, several days, and it looks like ES is kind of going net short a little bit, and NASDAQ I'm seeing buy the freaking dip, and I think those people are going to get ripped. So be careful going long ES and NQ. That's, if you're unfamiliar, that's like SPY, SPX is ES, and NQ is NASDAQ, QQQ, TQQ, SQQQ, all those NASDAQ derivatives. Russell continued to drift, now not really pushing as far down as we're seeing on NASDAQ and ES, but getting below the orange box here, we can easily follow my arrow right back down to support down here around 1830-ish. We look at the daily chart and correct this up, zoom it up. Got lots of arrows on the chart, but the path right now seems to be that we're going to come down here, retest the support area, either here or down here, If we can hold it, we go up. If we start breaking below, we're going down. Target down here around 1640 right now. So that's kind of the two paths. You got to be careful, but you know, a retrace right down into this area is the highly most likely scenario over the coming days, probably into maybe into early July. Could buy a put a couple weeks out, maybe. I don't know. It's should play out. I don't see Russell holding the box. We could hold the box and just blast off, but I don't quite see that happening. So there you go. IWM, that's Russell, RTY, Russell, IWM. IWM likely to come back down here to 180, maybe down here in the 178 to 175-ish area and test this. Start breaking below that, we can go on down to 160. We start bouncing off of that, we can go up here to the 200s. So that's how that works on Russell. Oil just continues to chop around, that's another lower high. This can break down. Be careful. Oil and copper not really showing super strength, like where everything's rosy. Gold almost down to the roadmap line. Almost there. Kind of expect it to get one more extension down there and grab it. Bitcoin continuing to show strength. Beautiful. Probably going to go up and hit the 32,000 target at the minimum here. I was almost thinking we were going to get it yesterday with the strength we had, and then we kind of stopped at 31,000, and or just shy of it. So we could see that 32.8, possibly 35. You know, moving on up. We've got targets all the way up to 42. And I talked about it extensively on Monday, so you can go watch that video. Ethereum also showing some strength, a little bit of chop here on probably that's I would guess that's the contract rollover, because I don't think we see it on the actual spot market. Yeah, we don't. That was probably the contract rollover for Ethereum on the futures, and yeah, chugging higher. Target up here around 2270-ish. It's breaking above the resistance. A little bit of trouble getting through on Ethereum, whereas Bitcoin pushing on up. So dollar saw a little volatility yesterday, and we were kind of pushing higher, and then we dropped out. Now we're finding support again before the next move down. I mean, we're right at the retrace zone. This is the support zone. It was the support zone before. It's still the support zone because it's the 618 retrace of this move up. And we hold support here. We can go higher, but start pushing on down makes the 99 area highly likely, and possibly even down to the mid-90s, where I've been talking about since, February, March. Anyway, stuff moving today. Root. Nice little pop, but probably going to retrace that. LCFY. Dang. Heck of a pop, but probably going to retrace that too. BA. Let's see what we got here. Got to zoom this up. Got all my notes on here, blocking it out. There we go. Let's just delete these at this point. Had a target at 225. We got really close, 223.6. Then retraced it almost all the way back to the roadmap line. Stalled out a little early. Gapping down. May come back to the roadmap line. Highly possible. Goose, I know you've been waiting for to grab a new position. I'd wait for it. It may come on down. IONQ. Not really moving, even though it was on StockTwits being talked about. Looks like it may come down to the roadmap line. ACN. Yeah, that one looks like it's coming down to the roadmap line. OXY. Not really moving much, even though it's being talked about. Primary expectation back down to 52. Can't hold 52. Back to 47. I don't care what Warren Buffett has done. That's the corrective price action we have in place. OSTK. Stuck at the roadmap line. And We have a big resistance zone right in here that we may pop up and test, but that's going to be tough to get through. It's been support resistance for quite a while. KBH, oh, well, let's see. It's been a pretty good move there. Let's remove the prior stuff. Draw that in, yeah, right up into the extension targets. And see this one back here. Yeah, extensions. Probably, I would expect this to get a deeper retrace to match one of these prior retraces at the minimum. And maybe a bigger, deeper retrace. Something like that, closer to the roadmap line. Might be in store for KB Home. DRI. Garden Restaurants getting slammed a little bit. What is that? Is that still Red Lobster? No, it's Longhorn Steakhouse, Olive Garden. They sold off Red Lobster. So that one looks like it's going to come down again. That was probably the extension move. Yep, 272. That was pretty big. So we may see an outsized retrace there. GMS. And that's probably hitting targets also. And played out the 1618. And may need a retrace here. You can see, stopped at the 1272. Retraced a little bit, popped up, hit the 1618. 76 could be a next upside, but more likely to do that after a move like that. PIXY. Shift Pixie. You know what? This looks like a freaking dumpster fire right here. That looks like a dumpster fire of a stock. I've seen one lately. Yikes. That can go to 0. So, Bud continuing to rally here. I think we're going to, we did find some resistance at the roadmap line. I don't care what the political story is. This is a measured bounce setup. I did go long. I am kind of expecting this thing to rocket on a bit higher here. 85 area, highly likely. At least 80, if not like 89. I am long-term long on this, out with some leaps. And into a synthetic where you buy a call, sell a put, buy a put underneath it. It's kind of like financing the call with a bull put spread. Details on that are in Discord if you're interested, in the links in the description. Anyway, so looking for that to continue higher. We do need to break through that resistance. So there is resistance at the roadmap line. We start breaking below this low though, it's all over probably and going lower. TLSQ. Getting a little bit of turn. This is a Tesla bear. So when Tesla goes down, this one goes up. And obviously with Tesla going up lately, this thing is going in the toilet. So I would be very careful there. SCO, just chopping. This is short oil. It's just chopping at the roadmap line. Not really showing much, you know, versus UCO, the long oil, just chopping below the roadmap line, which is kind of bearish and can go down to 18. So lots of the oil indicators, the leveraged instruments here, not showing strength in oil. ROIV continuing to churn higher, pushing ever so slightly. Target still at 10, 70, possibly 11. But eventually this thing, this little rally here is going to run out of steam and come back to the roadmap line. So I don't see any big motivator for this to break out and just go crazy exponential. TLSS, you know, Tesla Bear 1X, unleveraged, you know, getting a little bit of pop. That means Tesla pulling back a little bit, and that's, you know, I've been talking, like once we ran out of steam, we're probably going to return at least back to the trend line, if not back to the roadmap line. I do expect a roadmap line test as my primary expectation, just because this is what happens. Like, look at the S&P you're here. Look, we broke out of the trend line. We came back and retested the trend line. We came up to the trend line. We came back down here. We broke out. We came back and tested it. That's a classic pattern. Tesla got a little overexcited on the trend line. Of course, my trend line is not perfect. If you go back and look at the highs, we could possibly, I could possibly have it off just a little bit because I didn't line it up on all the highs, and TradingView keeps moving around a little bit. So if we kind of adjust it slightly, we're just right at the high, and we can come right back down to the roadmap line, right in there, find support before we go higher again. Now, it got downgraded by Morgan Stanley last night, this morning, whatever. They said 250 is their target long term, and they changed it from overweight to underweight, or maybe it's just average weight, whatever it was. I didn't know that they were going to do that, but this can lead to a bigger retrace right back to the roadmap line. I was on top of this all the way back here. I have no reason to believe that we're not going to do that now. Nothing's changed for me. I still expect Tesla to pull back to the roadmap line, find support, and then go up for the next move. While it can keep grinding higher, I do expect it to pull back into this area, find support from the prior, from the breakout point here, find support at this orange. The roadmap line should come up there by the time we get there, maybe sometime in July, and then we can launch off again. GPOR, that one looks a little sketch to me. Sideways gnarly, right up at the final resistance of that prior high. Definitely be careful. That does not look like a breakout at this point. It looks like rejection of the high, and we can come right back down. We've seen some big pullbacks off of that zone before. NVIDIA, getting a little bit of lightning, but we need more pullback on to flush out NVIDIA a little bit and get it back to healthy levels again. You can chase it if you want to, but the higher it goes, the bigger the drop is going to be. ENPH continuing to churn. My target ultimately down here if we can't turn this into something bullish here. We hold the higher low and break out through this trend line, going higher, but otherwise ENPH probably going to return to the lows around 113. SPR, yeah, it just looks like a gnarly chart right there. Spirit Aerosystems Holdings looks like, stay away from garbage charts. This looks like a dumpster fire garbage of a chart. Trying to chase that one anywhere. That's another one right there. Another garbage, another garbage chart. Trupanion, no idea what they do. XOP, this looks like a corrective consolidation under the roadmap line and can extend lower. Put a new fib line on here. We haven't really gotten the extension lower, so watch for this to break down. Like, we're making higher lows right now and lower highs. If we break down below about 118, probably going to go for this 108 area over here. And then last on the list, Dow, getting a little lightning bolt. My target was down here around 46 on Dow Incorporated. All right. Any questions? Bias for the day, still correcting. Still expect this to come down. And if we get below this low, below this support in any meaningful way, we're at least coming down to this zone. So below that level, coming down here. Below that level, coming down to the roadmap line. Below that level, we can get the bigger, deeper correction down here. All right. Any questions? Questions? Who's got the questions? So, EHTE. Yeah, that's just a choppy, gnarly chart there. I don't know how you trade that. Looks pretty tough. There, EHTE, that one. Still looks pretty tough. Not really showing me going anywhere here, so that's not awesome. Anyway, yeah, leaning bearish today. Still, like, I've been expecting a correction, and I still expect the correction to kick off and go. So, where can you find Monday's video? Look, if we go to the YouTube channel, you guys are already on YouTube. Just click back on the, go back to the click on my name or whatever, you know, or you can go to jeffreytrader.com/YouTube right here. And guess what? The live tab, you come down and there was a Morning Monster Crypto right there, crypto update. So that's it. That's how you find it. There's all the videos. You can go see what I have to say about crypto over and over. On every 3-day weekend when we have a market holiday, I do a crypto update. So there you go. And I'm live right now. Imagine that. So have a great day, everybody. And be careful. The account you save may be your own. You want to keep chatting with me in Discord. Links in the description. I'll see you again tomorrow.